please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now moving on to various stocks, even as LIC bailed out HAL's 4,200 crore IPO subscription to help the government meet its divestment target, the management looks quite disappointed at this time. Rukmini Rao caught up with the chairman of the company to get more insight on what could have led to a muted response. Let's listen in.
Not expected result. We were expecting a much better response. Because I myself was on the road shows and met with all the guys out, and surprisingly the result seemed to be a different way. But however, from this thing is we are 100% from except the internal employee thing has fell short. But otherwise 100%.
But on the HNI and also on the retail front, you know, the kind of response that you see, were you kind of foreseeing this kind of low, you know, turnout as far as that sector of investor goes?
We expected a better performance, but then the market is taking a beating for last 3 months. I mean, in spite of that, we gone into it. So you better be happy with what results has come out.
So do you think that it had anything to do with the listing price of IPO?
No. It's not anything with listing. We are not aggressive on it. Listing price is very reasonable, but then the market condition, maybe outside the timing.
Sure.
There are so many things opened up. The market has invested, I think, 10,000 crores or something. There are still some more to come. And maybe I would, given a different time, I think would have done much better.
Well, you're still tuned into Power Breakfast on CNBC TV18. Binani Industries defends itself on alleged fraud transactions highlighted in a forensic report, calls the allegations false and says that these details are in public domain and the lenders were well aware of all of these developments. Let's listen in to that conversation.
All these transactions have very clearly been mentioned in the audited accounts of the company. Historically, it has run through various checks, including December 2014. The MRA was executed within the JLF, and all this was part of the discussion at the JLF post this was done. That was A. B, the forensic report, the current one, which has been done at the behest of the COC or the RP, has formally not been shared with the company. On 12th of March, what we understand, the report was ready. 14th of March, there was a COC. If you were to look at the agenda for the COC, if it was such a material disclosure, I would have felt this should have been item number 1 on the agenda. This did not figure at the agenda at all, which itself for us shows that it was not that major. Otherwise, it should have been part of this. And why were the bidders not formally taken into confidence, or why was the progress of the forensic report not discussed at various stages?
First was the 487 crore rupees against the cement sales, which has not been recovered. Binani Cement had extended an intercorporate deposit of 1,148 crore rupees to its parent, Binani Industries, and forensic auditor has calculated that interest foregone on that account is close to 382 crore rupees.
I would like to say there are no related party transactions. There are certain transactions where the collections have been late, delayed, or may not have been generated as on date. If you recollect, maybe 3 years back, the company went through certain sales tax related issues. Company's accounts were frozen. New markets had to be looked at. Keeping all this in mind, there were certain steps taken. These purported fraud or the allegations, unfortunately, not a single meeting has been had even with the auditors of the company or the company management where these could have been discussed, clarified.
Well, moving on then, BJP President Amit Shah has written a letter to Andhra Pradesh's Chief Minister Chandrababu Naidu. Now, Shah has criticized Naidu's move and called it unfortunate and unilateral. Well, Maria Shakil joins us now. Well, Maria, the BJP president not mincing his words out there, isn't it?
Absolutely. He has written a 9-page letter. It's a rather elaborate and exhaustive letter in which he talks about various steps or various grants that have been given by the central government, which is essentially the BJP-led Modi government at the center in the last 5 years, and talks about how there has been no utilization of the funds with regards to 2,500 crore fund that was sent for the building of the capital city of Amravati, essentially to do with government offices. What Mr. Shah is essentially doing here is that as the BJP looks at expanding its footprints, rather getting a toehold in the state of Andhra Pradesh, because they feel that there is an anti-BJP or anti-center sentiment that is being built by Chandrababu Naidu. So this is an attempt, this is an open letter in which he's talking about how decisions that have been taken by Chandrababu Naidu essentially to pull out of NDA was largely political in nature. It's about political considerations rather than developmental issues at play here. You know, it's a rather, as I've been saying, it's a very, very exhaustive letter, and he talks about how the centre in the last 4 years has talked about various feasible projects and has initiated action in it.
All right, Maria, thanks very much for that. But staying with national news, BJP has avenged its defeat in Uttar Pradesh by-poll elections. The party won 9 out of 10 Rajya Sabha seats in the state, defeating the SP-BSP combined in a cliffhanger of a contest. The winner, Anil Agarwal, defeated Mayawati's candidate Bhim Rao Ambedkar in a race that went down to the wire. On to the primary market action then. Lemon Tree Hotels IPO opens today. Mangalam is here to give us more details about this issue.
Good morning, Ekta. You know, as far as Lemon Tree is concerned, the IPO, it's a good hotel, but the IPO valuations depend on whether you want to check in for the short term or the longer term. Because if you take a look at it, this 1,000 crore IPO, which opens today, is at the price band of 54 to 56 rupees a share. It's an entire offer for sale by Warburg Pincus and its investment arms, Maplewood. So we'll keep an eye out on that. Not a lot of the money, in fact, no money is going to the company itself. For the post-issue market cap, the company is vying for the number of 4,400 crores at a higher end, and it's a hotel chain which operates 3 hotels: Lemon Tree Premier, Lemon Tree Hotel, as well as Red Fox, and it owns 45 hotels, owns and operates 45 hotels in 28 cities. So it is a leading brand in the mid-price segment. The industry dynamics of the hotel are strong. Remember, the Indian Hotels management telling us, or telling the exchanges after the third quarter as well, that the industry dynamics have never looked stronger, but the company enjoys higher EBITDA margins. The only concern is the fact that it turned around on the bottom line just last year, in the financial year of the company raising its IPO. It has debt of close to 931 crores, which has only increased its expansion plans, because not a lot of no money is coming via the IPO. Where do they fund it from? That is a question. And the third thing, they have the highest occupancy in the hotel industry, around 76%. So even at 76% occupancy, what kind of net profit they're doing right now? They've just turned around. So what is the leverage going forward as far as increasing occupancy leading to increased net profit is something that we have to keep an eye out on. As far as valuations are concerned, an annualized 9-month EV to EBITDA for FY18, they're offering the company at 40 times, as against Kamath Hotels, which is trading at 9. The leaders, EIH, Associate, Indian Hotels, Royal Orchid, as well as even the likes of Indian Hotels, all of them trading much lower valuations than Lemon Tree. So it'll be interesting to see whether Lemon Tree attracts a lot of the guests or people go to other hotels as well.
All right, Mangalam, but what about the cues to watch out for the derivatives market?
Nigel, for all practical purposes, we're already in the expiry week as far as Friday was concerned. Given this week's expiry is on Wednesday, cash market flows phenomenal. The FI has bought about 1,600 crores. The domestic institutional investors did sell about 900 crores. But in the index futures, the FIs went ahead and sold about 2,000 crore rupees. And that is what is something that reflected even in their long exposure, which has now dropped to 37%, as against 55%, which was at the peak of this series itself. And in an expiry week, the FII longs going down down to 37% is something that I'll watch out for. Another thing that stood out was, irrespective of the close on the Nifty futures managed to hold above that 10,000 mark, and the FI has added about 10,000 long contracts in index calls, negated by writing about 10,000 calls on the short side as well. So we saw some call addition at the 10,000 level, 10,100 level, 10,050 level. So let's see whether that upside creates a bit of a hurdle, or maybe we see some more short covering in the expiry week. As far as puts are concerned, 9,900 puts saw a lot of writing. 10,100 and 10,000 put writers ran for cover after Friday's fall. Watch out for Jindal Steel, JP Associates and Reliance Communications. These three stocks come out of the F&O ban in expiry week.
Okay, all right, Mangalam, thanks very much for that. But now let's go across to Manisha, who joins in with all the action on the commodity and the currency space. Obviously, crude would be top of mind, considering where it's trading. Manisha, morning.
Well, absolutely, yes. You know, with the crude oil prices trading above $70 a barrel, and there's plenty that has come in together as fundamentals to support the prices higher, starting with the US dollar itself, and you have seen that one slipping to a 16-month low versus the Japanese yen. There are global trade war fears. There is this political development in Tokyo, and it is the tangible commodities, the premium saving commodities, which actually have seen gains. So you have the gold prices trading at a 2-week highs, and the crude oil prices, after gaining 6% in the previous week, have started this week as well on the positive side. There also are statements from Saudi energy ministers stressing on coordinated supply cuts into 2019 as well. That is supportive. Also, you are looking at the oil producers now looking at a longer period than the 5 years for oil stocks as a reference point. For the longest time, the oil producers kept saying that they have to bring the global supplies to a 5-year average. Now they could be looking at a longer-term average. So that is supportive for the prices here. And then you have reports coming in from Goldman Sachs, Morgan Stanley, etc., where they are putting out the crude oil projections anywhere between $75 to $82 per barrel by the third quarter of this calendar year. So we are looking at very bullish positions. The net longs are nearing record highs yet again. The fundamentals are supportive. The strong demand growth estimates have been on the higher side. So all of that looks like you could be looking into another week where you could see crude oil prices moving higher from here.
Okay, all right, Manisha, thanks so much for joining in and giving us those details. Well, on that note, we'll wrap up on Power Breakfast. But as we do that, we leave you with the picks of our Bullseye contestants on day one of the week.
I have a buy call on Oil India, stop loss 340 and target 364. The next one is a buy call on Marico. Stop loss has been kept at 318, whereas target is at 339. The third one is on the short side, and that is MCX Futures, with stop loss placed at 722 and target at 676. The last one is also on the short side, and that is Raymond Futures, with stop loss at 915 and target 860.
First call for today on the buy side is going to be Marico, and long positions can be created here in Marico, keeping a stop loss of 316.40 for the target of 348. Next call on the buy side is going to be Titan, and long positions can be created in Titan, keeping a stop loss of 869.90, expecting a target of around 956. The next call is on the short side is Capital First, and short positions can be created on Capital First, keeping a stop loss of 636.50 and expecting a target of 570 on downside. And the final call is again on the short side is Chennai Petro, and one can short Chennai Petro at CMP, keeping a stop loss of 331, expecting a target of 296.
My first call is buy on Titan Industries, maintain a stop loss of 870 for an upside target of 925. My second call is buy on Bata India, maintain a stop loss of 690 for an upside target of 725. My third call is sell on Dr. Reddy, maintain a stop loss of 2105 for lower targets of 2015. And my fourth call is sell on Andhra Bank, maintain a stop loss of 41.50